Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your daily technical analysis of foreign exchange markets.
Euro-dollar. A relatively small bullish opening white Mariposa yesterday and second bullish white soldier. It was a continuation of the bounce up from late last week up off the combination of the flatlining short medium moving average, currently at 107.34, as well as the April 2020 low at 107.25. You could argue it was also still an extension of the move up from the recent compound weekly key reversal up, and the testing and rejection of the trend lines from the old September to November 2022 ascending wedge pattern that's currently so narrow at 107.01 to 107.07. We're currently within a fairly narrow area now, up to the 50% Fibonacci line of the January 2021 to September 22 move at 109.44. This resistance has some form, having capped the market last week and topped the market back at the very start of February. Beyond that, the next levels to look at are the July 2017 to November 2018 neckline, currently at 111.09, and the congestion from March 2020, centered around the 111.39 area. Now, so far today, a small move, a reactionary move lower, though not that far this time, and pulled back up to making it look like an indecisive doji cross right now, of all things. Cable, aka sterling against the US dollar. A second bullish white soldier yesterday and a new high not seen since early February. It was also significantly the first close over the 50% Fibonacci line of the June 2021 to September 2022 move at 123.16. Well, since that time as well. We are now getting tantalizingly close to target X at 123.75, the primary target for the February to early March descending wedge pattern. The secondary harder to reach target X1 is higher up at 125.90, and you would have to see a move up to the highs of June last year to achieve that, as well as making a possible monthly key reversal up in the process. And so far today, a reactionary dip down to the 50% Fibonacci line at 123.16, but not maintaining the small bearish incentive, but recovering back up over the 50% Fibonacci line and looking like a possible, I don't know, dragonfly doji perhaps, maybe. Euro sterling. An indecisive doji cross yesterday, verging on becoming an indecisive spinning top pattern. The market seems supported nearby by the flatlining medium moving average, currently 87.78. However, in the slightly bigger picture, the market seems to be moving in between the August 2022 to date uptrend below, currently at 87.39, and the overhead recent downtrend, currently at 88.88. They are not forming a sideways triangle because, frankly, they're not good enough, not yet. But I am also mindful of the overhead 50% Fibonacci line at 88.51. Of the March 2020 to March 22 move at 88.51. Now, so far today, a slightly lower open and dip down to the flatlining medium moving average before a rejection higher. We're still within yesterday's range, but we are interestingly set up for a bullish engulfing pattern right now for today, which wasn't that hard to accomplish given yesterday's doji cross, but it also sets up as a possible indecisive spinning top. So, yeah, a combination pattern there which doesn't necessarily combine. US dollar against the Indian rupee. A slightly lower indecisive doji cross yesterday. I suspect this indecision, coming as it did after an immediate countering bearish engulfing pattern in the previous session, was due to the proximity of four supportive factors. The first two were the slowly rising medium moving average, currently 82.15, and likewise the slowly rising short medium moving average, currently at 82.20. These are good, but no match for this market, as we saw back in early March. That is why we also have, thirdly, the optimized lower trend line in dark blue, currently at 82.02, of the 2023 proposed ascending triangle pattern. And finally, the August 2022 to date uptrend, currently at 81.91. That prompted my drawing in part of that ascending triangle pattern in the first place. Meanwhile, overhead, we have the upper time, currently at 82.76, highlighted in dark green on my daily chart, of the October 2022 to early January bearish shift pitchfork, and the upper trend line, currently 82.97 of the sideways triangle in dark blue. This sideways triangle is the current dominant pattern here, and after yesterday it still seems to be. Now, so far today, a reactionary move back up with what looks like a small combined bullish engulfing pattern and bullish opening white Mariposa. It could also be seen as day 3 in a 3-day bullish morning doji star pattern, but it's early on that as yet. US dollar against the Brazilian real. A bearish opening black Mariposa yesterday and third bearish black crow, plus a continued suitable follow-on lower to last Friday's bearish dark cloud cover pattern and last week's outside week as well. The move lower and close were the first ones below both all the moving averages, plus below the broken upper time, currently at 519.88, of the late July to late September 2022 bearish shift pitchfork, which is highlighted in dark blue on my daily chart. This pitchfork is still influential despite being broken, though I'm minded to look more towards a pattern that was created by this very pitchfork, and that is November 2022 to date bear channel, and that's currently 489.28 to 538.96, which is highlighted in bright red on my daily chart. These were complementary to each other, as I say, with one giving birth to the other, but I'm minded to think the bear channel is becoming the more dominant pattern right now. But then over all of this is still the shadow of the monthly key reversal down we saw in January. US dollar against the Mexican peso. A fourth bearish black crow yesterday and a continuing follow-on lower to last Friday's unusual key reversal down. We're still well within the breached, arguably broken bear channel, currently at 1792.01 to 1906.66. That has repaired itself and is highlighted in dark blue on my daily chart. It's not a perfect pattern, but it continues to have merit. I have also still left two other, what I believe to be significant features on my daily chart. Firstly is the neckline, currently at 1791.84 and highlighted in purple on my daily chart, of the February to April 2021 head and shoulders top. This has acted as the latest roadblock in this market's journey south, shall we say. Then we have the neckline in bright green, currently at 1858.04, of the January to May 2021 head and shoulders top. This neckline had been important back in February when it was getting tested, but has since diminished after the subsequent move lower, but it's still there, and this week has the declining short medium moving average, currently 1856.92, as company. So far today, we're a continuing follow-on lower down towards some minor congestion from early March between 1810 to 1793.5. That was probably created by the combination of the lower bear channel line and the purple line neckline in the first place.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final important bit.